Hey everybody, it's Brett. I wanted to give you guys a market recap. It's been a couple weeks. I've tried to upload a video or two this week, had some technical issues, but probably better that we waited because of this recent news. And I'm going to dive into that here in just a moment. So we'll cut to this chart here in a moment as well. This is the DXY with some different zones of where things could take us. But I want to start out with some of the news that we've been experiencing this week. Obviously, been a lot of things happening in recent weeks with bank failures. The most notable is SVB, Silicon Valley Bank, rather, and financial group files for bankruptcy, which is no surprise following and before Signature Bank and the other bank that was before that. The biggest news was the Credit Suisse Bank, which we're going to talk about in a minute. But I guess this has been absorbed. And the bottom line of all of this is the Fed has broken the economy and is now injecting $2 trillion back into the economy. And so I'm going to get to this in the final news article, but it's big news. So with this, Bitcoin's actually pushing towards 27,000 and a new 9-month high. Question is, do we hold here? Do we pull back? I think we're topping out a little bit. So we'll look at that in the charts. But the Fed goes ahead and injects $300 billion into the economy to help fight against the economy unraveling. Typically, that's what the Fed will do. They will raise interest rates until they break something, and then they start easing to back off of it. And at that point, they've already broken something, which we've clearly seen with 3 large banks failing and 2 of the largest U.S. banks failing in the last 2 weeks. So this is notable, and but also a turning point. So Coinbase is also looking for offshore crackdowns, offshore locations as the U.S. cracks down on crypto. These are some of the things that are happening. And quick aside on the banking, the Harry Reid of the Frank Reid Dodd, whatever that's called, the act, the Dodd-Frank Act. I get the guy's name wrong, but essentially he's come out and say that Signature Bank should not have been shut down based on the rules, and that the U.S. is really unfairly targeting crypto-friendly banks. So Kraken has vowed to move offshore or create their own bank offshore. Now Coinbase is looking to move offshore. Wouldn't be surprised if Binance is also looking to create their own bank. Recently, they just injected $1 billion of their own money, taking it out of BUSD, their stable coin, because the US also appears to be cracking down on stable coins. And it makes me wonder if they didn't come in and take down SV Bank and also Signature Bank as a word of warning to say, don't mess with us, but also so they can come back in as the white horse, the saving the day, but really as a Trojan horse coming in and trying to fix everything with their money. But I'm sure they will have regulation tied to this, and in some ways have their hands inside of these restructurings. So it remains to be seen. But it is scaring companies like Coinbase offshore. It's certainly a prudent move if the U.S. is going to continue being this crypto unfriendly. And so at some point that'll change, but at what phase? When the rest of the world is already leading in crypto, we'll see. The Fed swaps $9 billion of money into Swiss National Bank. This is after also doing some credit swaps with them, but they actually have injected $9 billion to Swiss National Bank to help bail out Credit Suisse, which is one of the largest banks in the world. So SVB Bank was the second largest bank failure. Its Signature was the third. And so, but those are U.S. banks at around 180 billion. Swiss Credit Suisse Bank was around 480 billion. So massive bailout there. And clearly something has broken in the economy, but that could lead toward quantitative easing, and looks like it is, so that the desire for risk on assets such as Bitcoin, et cetera, is back on, and could be back on very shortly. Also, I found this article interesting. The CEO of BlackRock is saying very interesting developments happening. This is an article from a couple of days ago, but actually in the midst of the banking crisis, he's saying, Larry Fink says that specifically, there's some very interesting things happening with digital assets. And so the handwriting is on the wall that once all of this settles out, that things are looking good for crypto and Bitcoin. So that leads us to the final news article I want to share. And this is really a blog post more than a news article. This is by the founder of BitMEX. And many of you know Arthur Hayes, but this is a long article. Essentially, he says, though, that the Fed has just kicked off the bull market, because what they're essentially allowing banks to do going forward is to print money ad nauseum, not only in the US, but all over. And so if you want to read that, you can go to the BitMEX blog, or blog.bitmex.com/KIISEKI. Interesting article. It's a long read, but essentially, yeah, that's what's happening. They're paving the way for the ability for basically these banks to print money as much as they want and push crypto, propel crypto to new highs. And so I'm just reading some notes here. Should be good for businesses and everything crypto related. The Fed's new program for banks essentially means infinite money printing moving forward, not only in the US, but other major central banks. Wow. So how much has changed in a short period of time? Let's dive into some charts and have a look at what we can see on the DXY here. So I've had this run for weeks now, and these are the different zones where it would correlate to Bitcoin. And I'll just zoom in here a bit. So from back here was kind of a critical pivotal point. We pushed higher into what I have as a crypto pullback zone. And certainly we've seen pullbacks on crypto, although not recently. So we pushed higher on the DXY. We've pulled back on the DXY as Bitcoin's pushed higher. So a big question mark was, would we break out into this zone and see Bitcoin and crypto hitting new lows? We are still critical points here on the overall market index for crypto and that $1 trillion mark. We'll look at that as well. But right now we're still in this kind of the crypto pullback zone, but really looking like we'll head down and further into the crypto rally zone. I think we're at a bit of resistance on Bitcoin at this point, but hopefully, but that's good news that we're not in crypto crash new lows zone. And as this drifts down on the DXY, if we do get down in these lower regions below 100, you can see I have that labeled crypto super pump rally zone. And many people are switching their direction and calling for that. I remain cautious and recommend you do as well. The Dow is definitely still in not a bullish pattern here. If this were flipped, it would be a nice bottoming, but it's this is a sort of a rounding top pattern. So I think we could see lower lows here on the Dow in the short term, and that generally will lead crypto down lower with that. And let's dive into the monthly chart of Bitcoin. Now, I've had to redraw these a number of times, but it's always good to have an idea of what the likely scenarios are. And so if we do push higher from here and we close the day and the week at these higher levels, that would be very bullish. And I think we could push to 28 to 30,000 fairly quickly. There is an unfilled CME gap there around 28,000, 29,000. And at that point, probably would push up to 30,000. And so that's interesting. Also interesting here that the midpoint of this big vector candle was the exact resistance here and in August of 2022. And again, here last month in February, now we're breaking up above that with a nice hammer candle. And if we can close above this all important 25,300 level, that's really been holding us the last few weeks. In that case, I think we could easily push up to 28, 30,000 and then see some kind of a retracement more than likely. Although it's possible it shoots higher. Bitcoin has been known to do that, but I think more than likely we pull back and either then bounce on up to probably 48K to 50K. That's a golden pocket Fibonacci retracement from the highs in November 2021 down to the lows here of November 2022. So, full year later, finding lows and the bounce point on the between 65 and 0.618 retracement, that would put us right around 49,000, 50,000. That would make sense. So you can see I have an alert there, and I would anticipate some resistance there in a short-term pullback. Now, if we can't hold 30K when we pull back and it breaks below 25K again, then I think we could see these lower levels, but I drew these before the recent news of this money printing and the 2 trillion the Fed is going to inject back into the economy. So these are looking less and less likely, but we are only halfway through the month. We need to see where things play out, where the end of the monthly candle is. And if it's back below this 25,000 level, then, there's some news could happen. As we know in crypto, expect anything. And there may be another shoe to drop with all of the contagion. And so certainly that's possible. The damage is in play. The dominoes are falling. And certainly if Credit Suisse is also heading down. It may be too late to save some other bigger banks. There may be more damage here than we realize. And so we have to remain cautious. And these lower levels I've identified, 16.5, 14,000, I think would be the lowest we'd see. We still currently in an overall macro downtrend. So we have to remember that. Some people have been calling for 10,000, sub 10,000. I don't think that's viable at this point, but I'll show you a chart which shows why they're saying that. In terms of our own indicators here, just to pull this up one more time, I'm very encouraging that I've got another chart on it actually here, that our custom indicators that we follow, actually it was this one, the early reversal indicator, again, firing here, which has fired on every single one of the bottoms in the past 4 market cycles. And so we had it all the way back in 2012, this green arrow, as well as here in 2015. And we had a little bit of a pullback after that green arrow. So the question was, did we pull back here and retest the bottom, or do we push on stronger, higher like we did in 2019? At this point, it's feeling more like we just continue pushing higher, but we have to remain open to all of these possibilities and that fourth ERI signal. So when these combine with our trend strength indicator, that's our confirming signal that we use. That's highly accurate and high probability that it follows through. So we have both that and this trend strength indicator, which is right now, I've been waiting for this. It's breaking above the 20 line, very bullish signal. I want to see how the month closes if this still is there, which would indicate further upside and not pulling back. And then it will be watching for our trend strength indicator to go green. These are custom indicators that we follow, similar to some of the ones out there that you guys are using. And if you'd like more information about those, I'll tell you how you can find those. But more importantly, I want to get to the weekly chart here. Now, the death cross did trigger. I'm not a big believer in the death cross being that significant, other than it signifies the 50 period moving average crossing down below the 200. So that in and of itself, and not all that telling, but on this push higher, there's both bullish and bearish signals. We've pushed back up above the bull market support band, very important here, come back and retested the bull market support band right in here and bounced off a bit, very bullish. On the resistance side, we ran into trouble trying to get back above the 200-week moving average. As of now, as of today, and this week, we are above the 200-week moving average for the first time in many weeks here. So that's significant. We want to make sure we can close this week above that 25,300 level. Again, that's a huge line in the sand. And so we'll keep an eye on that. But in terms of a couple of things, though, that we need to watch out for, a couple of things. So first of all, this just happened today. The RSI breaking above the all-important 60 level, which has been a very strong support and resistance over the years. Resistance here, resistance, and so support, resistance. So we're back above that 60 level. Want to see that hold for the bullish scenario. However, there is still some bearish divergence on one of these charts I'll get to here, and also likely pullback from these upper extremes. Now, certainly we could bounce back up into the 99 percentile on the stochastics RSI. But we'll keep that in mind. And but I do see some bearish signals on our weekly trend strength indicator showing that it's a bit overbought. This can bounce around a little bit up in here, so I'll be watching to see if it breaks down below 80. And with this red signal, which would be a sign it would likely continue lower for a short-term pullback. I do think we head higher from here, but we've come so far. We had a nice rally that has consolidated a little bit. So I've got a number of charts here to share with you that are all on the weekly, a little cleaner sign of this right back above that 200-week moving average. So that's good. And again, for these tools that we have, these signals, if you'd like to find out more about them, it's just at moonstream.io/success with a special understanding through Max has agreed to let us tell you about those. And that's just mostly what we rely on. What I'm also waiting for is a bullish ERI, a green arrow here on the weekly basis, because right now we're overbought here on the trend strength indicator, and we've come kind of far. So I'd like to see a pullback and enter on a pullback. However, as I said, we'd easily push up here to 28 to 30K. Because another chart will show that there's not much resistance in that area. There is a CME gap, however, still, this is the Bitcoin on the daily basis. And the CMA gap on the lower one, we came right down and tested and filled this gap exactly. So I had this box drawn a little wider. It came back down, filled that CME gap exactly. So that's filled. With the one that hasn't filled is this one up here between 27,320 and about 28.8. And at that point, the question is, do we hit that short term and then a pullback, or do we just push on up to 2830K, which, as we can see, I'll turn the ERI off here, that the congestion or liquidity pocket, rather, in consolidation back in 2022 is right in this range around 30,000. And when we dropped, we didn't have a lot of support and resistance here. We came all the way down. We've already broken above this resistance area here. So this should now flip as support, and that gives more strength to push up higher toward that 30K region. So we just need to give that a few more days to see what happens. Now, as of yesterday, and again, we haven't closed today's candle yet, so depending on when you see this, this could have held, or it may have pulled back. We broke back up above to 26,000 the other day, and it sold off on the end of the day. So we have to be careful to make sure we're watching closing candles only, because if we do pull back and close below this 25,000 again, then the setup is looking more like a head and shoulders. And so that would obviously be bearish. The measured move with that would be back down around 19,300. And then from there, probably some consolidation and pushing higher. But this new news is pushing markets higher. So my feeling is, we will close higher on this. And rather than being in a downtrend, it looks like we could be actually in a macro uptrend. Depends how you draw this. So with these things, it's always kind of depending on the reference points that we have. So if we draw it that way, and maybe I could even extend that out a bit. The interesting thing there is that would sort of erase this whole FTX debacle, which arguably wasn't supposed to happen. And had that not happened, this would look like the continuation of this uptrending channel back here. Do you see that? And so that would have sort of negated this whole lower area. But now in the Wyckoff distribution patterns, this is an important pattern here, which signifies a bottom, and it's called the spring. So we could have just seen the spring in the bottom of the accumulation. So kind of at a really interesting point. We want to see how the week closes. And that's why I have this question mark here. Do we close and stay above 25.3, in which case we're in a new uptrend? That's bullish. Or if we reject here and back under that 25,300 level, that this head and shoulders pattern is looking more prevalent. Okay, so with that said, let's take a look also on the daily basis. A little bit overbought on our trend strength indicator, but it did nail, signals did nail this bottoming right back here last week on March 12th. We had the ERI signal here, the green arrow, followed by the trend strength indicator going green. And then we had the signal line going red to green, and then the trend indicator, which in this case, the key is to the watch symbol. The bell is the buy signal. So we're in a series here, which I think likely will continue, but might hit some more resistance, like I said, where we are. So we're in a bit of we want to see how this plays out, but hitting resistance here on this trend line. Can it hold? And if it does, probably going to trade sideways for a bit, possibly pull back a little bit. The ideal scenario is a pullback here to land and bounce off of the 21 and 50-day moving averages to push higher up above 27,000, back to that CME gap and onward to 30,000. So that's my read on this. If we want to look at the 4-hour really quickly, again, looking at this, hitting some resistance around this 26,000, 27,000 level and the upper Bollinger Band. So I am thinking that we could pull back here slightly, but that 25,000 level, really important. So we've got to want to draw that and see if that holds. And our indicators showing overbought. In fact, on the 4-hour, our early reversal indicator showing that this should come down, and our trend strength indicator also turning down. So we'll see. Let's go back to the daily chart, and I want to also look at some of the important indices. We can look at Ethereum, of course, and I'll turn this off here, but I will turn on my radar. The radar showing mostly bearish on the 4-hour daily and weekly time frame. This is one of our custom ones as well. Kind of lets you look at 4 time frames at once. But you can see topping tails here, selling pressure. And so, I think that would be great to see a reset and come back and bounce off support on these, because that gives it more strength to push higher. We have seen a number of these sort of topping levels having trouble at that $1,700 level here from Ethereum. So just kind of visualizing this, does it have trouble here as well? It looks like it is. So we really need to see that push higher, but we are seeing higher lows, so that's good. And so it remains to be seen. All right, let's take a look at Bitcoin dominance. By the way, Bitcoin dominance has been kind of pushing closer to 50%, big pump higher in Bitcoin dominance. So question is, will Ethereum lead this rally or Bitcoin? I was thinking that Ethereum was going to be the big leader here, but now it's clear that Bitcoin is leading the charge, which is good news for many of us. And I'll just redraw this upward trending channel on the Bitcoin dominance. May hit some resistance here right around 49%, but all things in a market rally and return to the bull, that's not as important. Ethereum dominance still holding tight. I'm going to put it on a 5-day chart just to kind of bring this in where it's easy to see. We saw this flip back here around November of 19, where it was going down in a downward channel, flipped bullish. So pushed up here, had a successful merge last year, and right now is Ethereum's going through the test merge. I believe it's called Gearly, and head of the Shanghai live net. So the Gearly is the test net, the live net is happening. This channel here has got a hold here. It's actually just going sideways. So we want to see ETH dominance above 21.5% for that to sort of really kick up here and may lead the next level of this charge. I think people want to see that the Shanghai update is also successful on the live net. All right. That being said, people are leaving stable coins. We have the DX USDT dominance kind of sideways, topping out here, leaving its upward trending channel. So we want to keep an eye on that. We already looked at the DXY, so I don't need to bring that up here. Let me pull up the total market cap. Now, the total market cap, if we zoom in a bit, it had a head and shoulders pattern forming. But what's important here is if I zoom in a bit more, it has been in this downward trending channel. So, but it is breaking out of this channel. So again, if we can hold here on, this is a 5-day chart. So let me go back to a daily. Maybe just a 2-day to smooth things a bit. This is very significant. So if it can break out and hold above these levels, about 1.1 trillion, just under that, then potentially we have broken out of this downward trending channel that we've been in since the top, and we are forming a new upward trend channel, and this head and shoulders pattern does not play out. So that is the bullish scenario. But again, if we today and if we do on the daily here, if we come back down and below it, we've seen many fake outs of these trading channels, but to me, it is now currently it is disqualifying this head and shoulders, that right shoulder pattern, and so that's very significant there. So it looks bullish overall. If we want to look at any coins in particular, some of these are pulling back and have broken down from their upward trending channels here. So, Bitcoin is looking the strongest. We've got some of these, the altcoins are kind of largely struggling. I don't see anything that's really looking strong here at a glance. And so, if we just skim through this, but Bitcoin's going to lead the charge. The safest money is in Bitcoin. And as things really turn higher, this is going to lead the charge. Like I said, Bitcoin's at 5%. A Phantom coin, though, is one to watch here. But it's hitting some resistance at this point. So you want to draw these trend channels and really wait for signs of strength or breakouts. And I love to use this 21 and 50-day moving average as that underlying support. So anyway, guys, that's all we have time for today. I'll hopefully enjoy that. If you like the content, hit the like and subscribe. And again, if you'd like access to our signals here, you can go to moonstream.io/success and find out more about those. Highly accurate, especially when they all line up and catching reversals, either short term or longer term. So with that, hopefully we'll be doing more of these, and just the markets have been chaotic and wanted to let things settle out a bit. So thanks, everybody, and we'll see you next time.